Hey guys, welcome back to episode 17 of Jack of All Trades. I'm Kalen here with Brandon and David as always. Today we're going to go over a few different things. We're going to touch on some catalysts for the week. We're going to look at Tesla. We're going to talk a little bit about what's going on with Bitcoin. And then we'll talk a little bit about some small cap stuff that we've been seeing lately too. So Brandon, you want to kick it off and kind of go through what you saw this week?
For sure. So global market indices were largely flat this week. They started to consolidate on the daily time frame. The S&P 500 is a great example of that. It was down about 10 basis points, so a very insignificant move there. There's sort of a tug of war going on between a number of positive and negative catalysts. Do you guys want the good news first or the bad news?
Bad news.
Bad news.
So the bad news, there's two significant factors there. One, we're seeing a uptick in global coronavirus cases, as all of you guys may know. And the second is Joe Biden unveiled his tax plan where he wants to double the capital gains tax rate from 20% to roughly 40% for the wealthiest of investors. Yeah. And we'll definitely get into that later on in the episode. In terms of the positive catalysts, we had a number. We had more strong economic data. Every single week I'm coming on this show, I'm saying we're getting strong economic data. It's absolutely mind-boggling. We had the manufacturing PMIs come in, astounding number there. New home sales continuing to impress. We had a slew of really strong earnings. It's our second week of earnings here. We had companies like Coca-Cola, Chipotle, we had a number of companies. Netflix as well, which actually was a little bit of a disappointment, but we'll get into that later on again. And the third thing was bond yields. Bond yields continue to consolidate. We're down to about 1.5% on the US 10-year, which is really a happy number for the market. The market likes that. Market skeptics were a little bit worried a few weeks ago when we were looking like we were going to break that very psychological 2% threshold. So low interest rates and low yields, very positive for the markets. So that's great there. In terms of market leaders and laggards, there were two significant leaders this week. They were, again, non-cyclical, interest rate sensitive sectors, and that was real estate and healthcare. The interesting thing is these sectors were some of the biggest losers year to date. So now we're kind of seeing a little bit of a flippening happening here. And there's strength in some of the materials names, such as gold, lumber, and steel. In terms of the laggards, there's one laggard that sticks out, and that's energy, specifically the oil and gas sector. It's still the number one sector year to date. It's produced the greatest gains. However, it's given back a lot of those gains. So I think really to get a good feel for that market, we should dive into the XLE.
All right, let's take a look at that. Sorry, just on the bonds right now, I was just talking because you were looking at it since you were mentioning it. Looks like they all bounced off the 30-year. Everybody was bouncing off the 50 MA or haven't even touched it.
Pop up the 10-year, the US 10-year.
Yeah, there it is.
So it's kind of just chilling at that 50. Is that like a simple moving average?
Yeah, it's 50. That's 200.
Perfect. So yeah, maybe we're fine, comfortable, just chilling at that area. Maybe we'll get a little bit of a bounce. I see the RSIs making a series of lower highs and lower lows, so that's definitely something to watch. But as long as rates don't go up too fast, I think the market's fine, and the market's going to continue to chug higher as long as rates don't get out of hand.
Yeah, you're right. I think we have most of the weakness shaken out. You said XLE, right? Here we go.
Yeah, so the XLE, it's a market cap weighted US ETF of the largest US oil and gas companies. Top names in this ETF include Chevron and ExxonMobil. It's really a tug of war between the intermediate trend and the long-term trend. Definitely a bullish environment in the intermediate term for the oil and gas sector as the economy reopens. The manufacturing data, again, has been astounding. A lot of these seasonality trends, we have people are going to be driving a lot. It's summertime. Maybe people do some domestic travel because that looks like it's going to be possible this year, although the international is pretty much a write-off. And what do you see there, David? What do you see there technically?
I'm just looking at the long term of the 1 year.
Seeing some resistance at these moving averages.
Yeah, not only is it bouncing off in between these moving averages over like the monthly and the weekly, but I mean, you know how I love my triangles, but it's forming a wedge, man. It's forming a wedge. So it's a weak one though. Let's see if I can pull this out right. Looks like it'll take a while to play out, but I would say end of year we have a little dump. September, January, we're gonna get a nice little dump. I'm gonna right there.
That's why it's very important for us, because I said it was a tug of war between intermediate trend and long-term trend. Let's pop this up on a monthly, weekly or monthly, whatever you want.
Well, this is the weekly. What do you prefer? This one's more interesting. We got rejected off the 200 actually.
Well, let's look at a monthly, so we can really get the long-term trend.
Ooh, death cross.
Exactly. So whenever I look at any chart, I always ask myself, is the long-term trend up or down? This is clearly down.
Mm-hmm. There's a long resistance there. Is that 55, right? Kind of where that crosses?
I think there's there's an evening star pattern forming right there, David.
Yeah, you're right. What is this? Monthly. Yeah, shit. We closed this month. Ooh. This month's going to be pretty critical, actually. Or actually, no. This month's what? April? We're still in April, right? I think May's going to be critical. If May closes below this, $39 level, we got a lot more downside.
Mm-hmm.
It's pretty critical right now. I mean, the only thing that's kind of positive is you got a divergence on the RSI here. It looks like a double bottom with a divergence. So it's giving it a short-term kind of trend reversal. But like I said, these next few weeks, these next 4 to 6 weeks are going to be pretty critical.
Yeah, it looks like it's definitely coming down before it goes higher. Like even last April, it looks like it was like on those red candles, look at those big top wicks and everything. Eh?
Oh, these guys, eh?
No, yeah. Right after the big drop, like when it did its first bounce.
Oh,
look at that big top wick there.
Oh yeah, that's right.
Pressure, and then it comes back up right to that resistance line, right to your moving averages. That's a perfect spot. Like if I was shorting that, that's beautiful.
I felt like last year around that time, it was really a dash for trash, and people were bottom fishing for the worst stocks. And now that the reopening is underway and the market's sort of recalibrating, people are starting to really look at their portfolios and they want to hold quality names. So that's definitely important there. But also fundamentally, from a long-term point of view, oil and gas is kind of a dirty word in this day and age. In terms of ESG, investors want to put their dollars towards things that are green, things that are environmentally friendly. Like, for example, a good alternative to this would be solar energy, wind energy. We could look at some of those ETFs if you guys want. However, I'm just here to make a non-biased point of view here. So the intermediate, definitely bullish, but the long-term is definitely bearish.
Yeah, look at this. Chevron's almost mirroring the that ETF. Almost the exact same pattern. Yeah.
Well, I believe it's the largest holding. I think it makes up anywhere from like 7 to 10% of the ETF.
Right. That makes sense. What is it? Earnings expectations, 89 cents.
A lot of those individual names aren't doing too hot either, like like Enbridge and stuff like that. I was looking at those last year. They pay great dividends and everything, but their charts just don't look good.
Yeah, what was it? Historically, like spring is not good for energy stocks, isn't it? Is that right?
Well, I would say it'd be a good time to buy because you have the summer driving season, which is really good for that gas demand.
That'd be short term, right? Like, I mean, overall, these things are trickling down.
Well, it is short term, and then you have to ask yourself, is it priced in, yes or no? And I think it's largely priced in. Like, energy is not something that I'm very excited about. If you want to look at a chart that I'm really excited about, a chart that when you look at, you're really swimming with the current and not against it, would be the NASDAQ IXIC.
I'm just going to put this here till we check it out in a few months. I'm calling Chevron to fall sometime in August. NASDAQ, you said? Yeah.
NASDAQ.
All-time high, is it?
Yeah. So the great thing about the NASDAQ is I said we were having an evening star on the monthly. For the XLE on the NASDAQ, I see a morning star there, a very beautiful morning star. The RSI is ticking up, got some rejection of that, I want to say 12,000 level. The month isn't over though. We still have 5 trading days left. So this is definitely something to watch. If you could switch that to a daily time frame.
Yeah, I was just going to say, we had some indecision earlier to start the year. Right? Got a spinning top and what was that? A gravestone?
We got 2 gravestones over there.
Yeah. All right, so this is the weekly, or you want daily?
So pop it to the daily, because the weekly is great because we see some rejection of the 13,000 level. But if you look at the daily, what was the word of our podcast last week? We had one phrase that we just kept on saying over and over and over. Cup and handle.
Oh,
Do you see it right there?
Like, I don't even remember that.
that's the
We said
thing
it
is we
about
say a lot.
20 or 30 times last week.
Yeah,
That's right. You know what? You're right. That was the theme.
So beautiful cup and handle. We didn't quite get that gap fill. I was looking at a gap fill at 13.5. We didn't get it. We got close enough. This week is going to be the catalyst for the NASDAQ. We have so many earnings. We have over a third of the S&P 500 reporting this week. We have Tesla on Monday. We have Google, Microsoft, Alphabet. Alphabet is Google. We got Amazon. We got Apple. We got pretty much all of the biggest, most dominant companies that are going to move the NASDAQ. So this week is just a huge week here.
I'm sorry. I'm just noticing little fractal because I'm starting to play with those a little bit on the charts, and like we had the same issue play out last year. This little cup and handle kind of thing going on. It was like a W bottom, but yeah, looks like we just had the same thing here 1 year later. And
but look at the inverted. Look at the inverted head and shoulders. It's playing out right now. It played out last time.
Yeah.
And that was that October-November consolidation. And we were just waiting for the catalyst being the election.
Yes,
we were just literally treading water for the whole that whole campaign period.
Yeah.
And now the catalyst this time, earnings.
And look, even the moving averages are playing around just right around right area.
Is that the 50-day it's crossing over there?
Yeah, it's the 50. The lighter one's the 50. The darker is the 200.
Yeah.
Well, the reason why we have these pullbacks is just a profit-taking event. And when the price gets too high above its moving averages, it just self-corrects. The moving averages move up, the price moves down, hit some sort of equilibrium, and then off we go. And that's why I love investing for the long term. It's a long-term endeavor here, and you buy the pullbacks.
Mm-hmm. Yeah, and we got even a little bit of a stronger signal than the last time. We have divergence here. It's a very faint one, but it's there. So it's playing out. We got some short-term momentum. So as long as the good news keeps coming, I think we're going to be pretty strong.
Do you guys want to look at Bitcoin?
Let's look at Bitcoin real quick, just because of the massive drop lately. There we go. When did that come down? April. So I think. Do you remember? Was this day the blackout, the 18th blackout in China?
Yeah, there was a very long lower wick.
Mm-hmm.
That's. I think that was the 20% day.
That was on a Saturday night.
Or 15, yeah, 15% day.
It was 20% drop in I think a matter of minutes.
Actually, you know what was funny? I was live looking at the charts those minutes, and it was like, once it hit a certain level, once you hit a certain level, you could tell that there was like the liquidity just went thin, and just like the stop just kept getting busted. There's no buyers. It just went boom.
Yeah. That's great. I love it when I see stuff like that.
Binance's order book just got destroyed, right?
Yeah.
Oh, I was so mad. So I was one of the lucky ones. I had two lowball orders, one on Binance, one on Kayleen. I was telling you on the Canadian exchange. I had the lowball orders, and they both hit, but they wasn't completely filled. But like people who were trying to like get orders, I was looking at them on Twitter. They're like bitching out Binance and CZ because none of their orders are taking place.
Just not enough liquidity.
Well, I don't know what it was. They said their matching engines were overloaded, but buyers couldn't buy and sellers couldn't sell. Everyone just watched this thing tank, and like it's like the most helpless feeling.
Yeah, that sucks. Yeah, I know sometimes like you get those really fast moves. It can like wick right through your buyer, your sellers, and it won't fill you. But I've never just seen it lock up on both sides.
It locked up on both sides, so I don't know what the hell was going on. But there was a giant power out in China, one province. So a lot of the mining is in China, and the miners actually migrate depending on the province because they're always looking for the cheapest energy. So China right now is going through this thing called the dry season, and there's one province they have the cheapest energy anywhere. So all the miners are there, and apparently that province had a power out like for like 24 hours or something like that, and it took out. The report was it took out 40% of the Bitcoin hash power, but it's more like something like 20%. But that report, along with Coinbase failure and that FUD about the Treasury, was it money laundering? Was it? Like there's those three things happen at the same time, and it just sent the price like straight down.
Yeah. But even like technically, like what do you think of this thing now? Like I know you talked about you're thinking it's going to come down to like 43, like 40 or something like that. Like those are the support lines for sure.
Okay, so technically we're forming a bear flag right here. I'm pretty certain. You could create like a downwards channel, like a diagonal channel. You guys love your diagonal support and resistance lines. So that's what I want. Okay, so let's go to a daily first. You could look at your Fibonacci's in a second, but let's go to the daily chart first.
Yeah, there we go. Daily, here we go.
So you're never going to go up and down in a straight line. You're always going to have a counter trend bounce. This weekend was a counter trend bounce. And it looks like we just tested that top end of the channel. For me, I wasn't using a falling wedge. I was using more so like a 1 hour. I was on the 1 hour time frame using a 50 period moving average. And we just kind of bounced off of that. Bull flag, we're just making lower and lower lows on like a 5 or 15 minute period. Mm-hmm. This thing's just going to cling to that, I want to say like $47,000, $48,000 level. And then we're going to have another waterfall.
Yeah, I think we got one more trip back up, but we're going to get rejected.
Hard.
We're going to get rejected again by the 50, right? And then that's what's going to take us down to the 200.
Yeah, like when I'm looking at that, I'm seeing, we had 3 times basically where it tried to really break to new highs. It did it 3 times, and every single time it just barely got out, and then it came down, and barely got out, and then it came down. So like now that we're selling right off like that, if it does end up bouncing back up to the top, everybody who's still in, who's underwater, is going to sell into that 100%, because they're going to say
100%.
Waiting for this thing to shoot up, and it didn't shoot up. So now as soon as they get back up there, they're going to take their profits.
Well, we've been in a period of distribution since like 30,000. Like I feel like we've been having the smart money sell to the dumb money. And David, I'm not sure if you have any insight on that based on the wallets and everything else. I know you did a piece on that danger zone. But this goes back to the quote that we were talking about earlier, is that markets are a tool for transferring money from the impatient to the patient.
Yeah, no, you're right. The on-chain data supports a distribution, but not from investors, but actually from miners. Because if people remember, they basically stopped selling in 2018. So all of 2019 they were mining but accumulating. They weren't selling because Bitcoin price was pretty low. I think at the time the estimates were miners were break even around $8,000. So if you're selling anywhere below 8,000, you're at a loss. So miners are just accumulating. And what happened was in January they started. Let me go to the weekly so it's easier to look. But basically, as soon as we hit new all-time highs in January, this entire period, miners were dumping hard. It's actually slowed down towards the end of March, but this entire period, they were basically dumping a year's worth of Bitcoin that they were mining. I mean, that's a lot of supply.
That's going to reduce your volatility a lot too, then, if that's the case, because they're basically just increasing the float, right? Which could, if you're a long-term investor, I mean, it's a good thing because you don't really want those crazy price swings.
Oh yeah, it's long-term bullish, and it's great that miners are cashing in because then there's going to be more miners. You're going to be able to sustain their business. So fundamentally, it's a great thing. But from an investor or trader's perspective, I mean, if all that supply was released in this period and it got absorbed, it begs the question: who's buying now? Like, where does anybody want to buy now? Like, has supply met demand, right? Mm-hmm. And I think that's what we're seeing in the charts. It's like it's not necessarily that we're going into a bear market, but the question is who wants to buy. And who wants to buy it at $60,000?
Yeah, exactly.
Well, by definition, guys, a bear market is a 20% drawdown from an all-time high or peak. So
it is, but Bitcoin is.
We're essentially in a bear market. If not right now, we're going to be getting into one.
What the hell is this?
I think this thing's entering bear market, man. I think that we're going lower than that 200 personally.
That's not an impossible scenario too. I mean, historically, that could also be very accurate. Most of the time, because of the halving, we kind of know how the bull market and bear markets operate. So we should technically have another 6 months left. But this could very well be the top. I mean, it looks like a double top to me. So,
but if we all know what's going to happen, then none of us know. When we're all thinking the same thing, no one's thinking anything.
We'll touch on the efficient market hypothesis next week because that's something interesting.
Next week, I can't wait to get into that. That's going to be a great discussion.
Absolutely.
But yeah,
Kayla, you got out of your positions, right?
Yeah, I sold most of mine at 63, and I bought an ATV.
That's awesome.
That's a good year, man.
Much, but I saw it try to break out a couple times and fail. I was like, I don't like that. So I took my profits, and here we are. We're coming down again. So I'll wait for another buy spot.
And I think that's just it. Like, there's a lot of people who are wise, either from just experience or from the last few cycles, but they know when to take profit, and they're probably enjoying their winnings, and they probably set some lower buy orders. And I mean, the only people I think that are crying right now, the ones that thought Bitcoin was going to go to 500,000 and Dogecoin was going to go to $10, and it's like, crypto can do amazing things, but nothing does those things. Like,
it's that same old story, man. Nobody ever went broke taking profits along the way.
100%.
You shoot for home.
Bitcoin sells dreams, guys. Bitcoin absolutely sells dreams. And if you were buying at like 50, 60,000, you didn't have an exit plan. Like, what do you do now? You bought Bitcoin at 50 or 60,000, thinking that it was going to go to like 600,000 and you would 10 times your money. Like, that's the story that we've been hearing for the last, 12 years for Bitcoin.
Yeah.
There's too many wallets that are in profit right now. So it's naturally you're going to see profit taking. And the more people the more people that go negative, the more people that you're going to have sell. And the more people that you have sell, the more people that go negative. So the dominoes are starting to fall. At some point, there's going to come a level where people are going to want to buy. But right now, it's not 48,000. It's not 50,000. It's lower than that.
Mm-hmm.
Yeah.
It'll be interesting to see like how it kind of sets in with like if people actually panic out of it. Like if you get that really quick, just waterfall sell off, or it's just going to kind of trickle down and find support, find new buyers, and keep going along, right? Because that's, like I know in Tesla we saw a lot of that. We saw a lot of that panic, like those big fast sell-offs, and we see that before in Bitcoin. But I'm curious to see if we see that now with the increased mining and everything, if that's going to keep happening, or if we're just going to start consolidating and just make those slower moves, and it's just going to kind of become a slow growth stock.
I think you're right about that. It depends on time too, right? If it comes down slowly, you can call it a consolidation phase, so we can possibly go back up. But if it just sinks like a rock, then like the market's momentum driven, right? So the faster it comes down, the more it's going to come down. So
there's a price consolidation and there's a time consolidation, and those I would both say are two different types of corrections.
Mm-hmm.
So if I were a Bitcoin bull, which I'm obviously not, I would want it to come down and form like a nice like hammer doji on some high volume, like a really, really fat wick, and for us to really bounce off of that with nice momentum. But we're not seeing that. We're just seeing like a bear flag just slowly being printed on the daily time frame. You don't want to see that. Mm-hmm. It's just grueling. And that's how bear markets start. Bear markets start when no one expects it. And when you get these bull traps and you keep people waiting for the next pop, and they're just grueling. And you only recognize when you're in a bear market after it's already happened and it's too late to sell. So good for you for selling. I think that's awesome. You'll probably have some much better entries in the coming weeks, and we'll just have to see how this plays out.
Yeah, it's funny how a lot of people like, they think when they see these really big fast moves that it's chaos and it's panic and everything, but the dangerous ones are like you just said, when you get that just really slow move. Like, for me, I'm a short seller. So all the guys that get blown out short selling are when you get those just really tight, slow grinds all the way up because they're trying to add on a big pop, but you don't really get a big pop. And then you're already in the position and you keep adding and adding and adding, and it just keeps slowly going against you. It's the same thing on the downside. It's like if you're trying to dip buy, just keep slowly going against you. And you're like, okay, well, maybe I'll buy here. Maybe I'll buy here. You need those big moves to hit the bottom, because those really slow moves, you just keep adding and adding and adding. And then eventually everybody's position is so big to the long or the short side. Eventually everybody's going to bail. And that's when you're going to get that massive move to the downside or the upside. Like I see that all the time in small caps, and it plays out on large caps on the daily as well.
That's so true. And what about stimulus checks, guys?
Okay, let's go to stimulus checks.
Because everyone got their last stimulus check in the US, like a month ago. So that money's been largely deployed. If you were going to deploy that into crypto, you already did. I don't know if there's another stimulus check on the horizon. I don't think so.
I haven't heard anything, though.
So fucking Biden's tax plan. So he's got a $2 trillion infrastructure plan, but those fucking Democrats, and Trudeau's doing it here in Canada too. They are redefining what infrastructure means. It traditionally means roads, bridges, fundamental stuff for the city to operate. Now they're calling social infrastructure. So that means social programs. That means welfare and checks. It's just these fucking people.
Yeah. I still drive on a broken road to work every day, but, you know.
And so here's my problem with it, right? So it's like if somebody heard me say that comment just earlier, they must be like, oh, I'm a rich snob. I don't look it. But let's just say they'll probably think, I'm a rich snob. I don't want poor people to get money. But here's the problem. Like, let's just take Trudeau's budget, right? They want to give $89 billion next year to this enhanced welfare program they're calling UBI. It's not UBI, it's enhanced welfare, right? Sending about, I think 2 or 3 million Canadian, $24,000 for the year, right? And I'm like, that's $89 billion you could invest in, say, businesses. Grants, loans, wage subsidies for small businesses, medium-sized businesses. Why don't you grow the fucking economy, right? If you give wage subsidy to maybe 1,000 small businesses, they could hire those 3 million Canadians.
Yeah, I agree with you 1,000%, man. I've had this conversation so many times. It's unbelievable. My buddy actually told me the best analogy the other day. I thought it was hilarious. He says, imagine you have like a little tribe of monkeys. He's like, you say, okay, you 2 monkeys, you got to go out and go get bananas so that you guys can eat. And the one monkey says, no, I don't want to go out. And then he says, okay, well, I'm going out because I want to eat. And then he goes out, gets his banana, he comes back, and then the tribe leader says, you got to split your banana with the other monkey. And you say, well, why? I went out and got my own banana. He says, well, he needs to eat too, so give him half your banana. And then the other monkey is going to sit down there the next day and say, well, I'm not going out now. If I just got to give up half my banana anyway, somebody else will go do it. And then eventually nobody does anything and the economy doesn't grow.
Yeah.
That's a really good analogy for that.
I thought it was great.
But you know, it's weird. So I'm like a pessimist in general, but I want to be an optimist on humanity. And the reason I would say that is because I feel like if people had worked and earned their money, they'll feel a lot better than getting a check.
Yeah, I'm sorry. I just got to say it just as a sidetrack. I think it's hilarious. You say, I want to be an optimist on humanity. And all you do is just like buy guns and like talk about apocalypse and everything. Like, dude, don't lie. You're not an optimist.
I said I wanted to be. There's a qualifier there. I wanted to be an optimist.
Sorry, go on.
No, you did call me out, though. It's very accurate. You got to have plan B.
Yeah, it's true though. I mean, like, you know, that's you hit it right on the head. I mean, it's like Jeff Bezos. He's a great example. You know, when they're talking about implementing taxes on rich people, and they're saying, "Oh, he's got, you know, $180 billion. Why? Like, what's he complaining about paying taxes?" It's like, you guys don't realize he's made what, 2.5 million jobs for Americans, Canadians, and that's, you know, so say 10 million people. Let's say they'll have families, right? 10 million people he's providing lives for. I mean, to me, like, you know, let the guy enjoy his money. He's created a city, like a country almost by himself.
Mm-hmm. Yeah. And actually, just not this earnings report, but I think 2 before that, I was reading their breakdown and their Amazon Marketplace. A lot of the revenue is coming from Amazon Marketplace. So that's people who are selling products on Amazon and they're paying for fulfillment services. I mean, they're supporting small businesses. If you have a small business, you don't want to do your fulfillment, you don't want to have a warehouse, Amazon.
Yeah. It's perfect. And then they can hire people and get more people working, get more people jobs. And any job is going to make you more money than welfare or stimulus checks ever will. So, yeah, I don't know.
Well, Amazon's great because it's been like the bridge between the old world and the new world in terms of retailing. So if you've been like a brick and mortar retailer that's sort of struggling in this new paradigm, then Amazon's great. And same with Shopify. Mm-hmm. So they're really facilitating that digital transformation, and they're helping people.
And I want to just give out. I'll give out the secret sauce right now because I know a very successful business within the last 5 years that did it. They went through Amazon Marketplace to sell their products. That was their customer acquisition source. They used Shopify to make their main website and sell their own stuff. And so people discovered them through Amazon. And whenever they ship product, they add a little card, say, go to our website, we'll give you 10% discount. And they converted those sales to their website. Very successful business. That's so simple. Anybody can do that. At least that portion, you know?
Yeah, I know. I was actually talking to one of my buddies at work, and he said like one of his good friends did a similar thing. He said he has like a couple kids that are like, you know, 2-3 years old or whatever, and they have like TV trays, I guess, for in cars. And he said that all the TV trays he was trying to find for his kids were like garbage, like it wouldn't hold their juice and their food would fall all over the place. He's like, this is stupid. So he ended up reaching out to a company in China, like going through the whole process, getting one manufactured. It's, you just stamp it out of a sheet of plastic. Did the same thing, went to Amazon Marketplace, got them to set it up, got them to ship it. And he ended up quitting his job. Now he does that full time, just through Amazon. And he's hired, he hired an accountant. He hired someone to help him do his orders and stuff. So he's given other people jobs now through that.
I love that. That's like the old saying, the necessity is the mother of all invention. Because I think where a lot of people fail when they're starting businesses is they're trying to solve problems that don't exist. They're creating products that solve no problem, right? It goes back to my thing about you need to go out there and do stuff. Once you do stuff, you feel you're going to run into problems. And then once you run into a problem, you can think of a solution, right? Yeah. And so if you're just sitting at home and doing nothing, then you're not going to run into any problems that are really going to help society, right? And you're not going to find a solution that'll make you any money. So what are you doing? You have to go out there, right?
Mm-hmm. Yeah, it's amazing. Yeah.
Do you have any insights on the tax plan in terms of any specifics?
I didn't read the whole thing. The only thing I saw was the headline catching, like they're going to raise capital tax gains from 20 to 40%. Like you watch the All In podcast, the guy do, like Chamath and those guys were bang on. They're VCs. So
I thought they did a great job covering that. Yeah.
So Kaylin, what they're basically saying is like, if you're disincentivizing people with wealth to invest in their money into companies, into the economy, then you're effectively hurting the economy, right? Mm-hmm. Or they're going to give these people incentive to find ways to get around taxes. And there are always loopholes, right? Especially for the rich. They can set up shell companies, whatever, right? And so what happens is whatever happens, it's going to be a negative for the taxpayers. And raising capital tax gains is just, it's an absurd thing to do.
Yeah, all it's going to do is open up a business where people will be able to avoid taxes more. I mean, like people that are making really good money, that's, they know how to get around the system. They know how to do it, legally, move stuff around, open businesses that don't exist, move it around for different purposes. Like there's a million different ways I could just name off the top of my head and I don't even do it. Right. So it's just, I don't know. It doesn't make sense to me.
Well, they raised another point. They said they suspect Biden might be doing it for optics. Like, cause it seems like it's the on trend thing to do right now to like shit on the rich and support the poor. It doesn't matter if it doesn't make any sense. Like as long as you look like you're doing that, you get some votes.
Mm-hmm.
Well, I think it's more of like a bargaining chip. Like I feel like he's going to the table and he's saying 40%. And like this has to go through Congress. This is going to take many, many months. Maybe it only goes from 20 to 30, which is still crazy because I believe Obama raised it from 15 to 20, which was like a 5% gain, whatever. But that's a lot. Like you're over doubling it. However, there is one silver lining though, guys. And I think Kaylin, you would have some insight in this. Do you guys think it's going to incentivize more long-term investing? Because they're not raising the dividend tax rate. They're only raising the capital gains. So people may be incentivized to hold on to their positions to the long term and just not sell them. Just hold on to them forever. Something like an Apple or a Home Depot, get their 2% dividend and take the dividends at a lower tax rate and just let the capital just grow and never dig into the principal.
Yeah, but on that side of things, I mean, we've spoken about this before on podcasts, is that without people selling, the markets don't act the way that they act. Like it would completely change the whole structure of how stocks behave. If everybody, or if you flip that percentage and say another 20% are all just buying stocks. I mean, short sellers, profit takers, dip buyers, all that stuff is what creates the economy and keeps it stable, right? If everybody's just buying and everybody's holding forever and ever and ever, if that's just what we talked about 10 minutes ago, you get that little steady upstream because nobody's profit taking. And then all of a sudden one thing happens and you just have a completely catastrophic waterfall to the downside because everybody panics.
I think that's a really good point. I mean, the whole idea of having a free and open market is price discovery, right? If you start to make these rules and incentives to do certain actions, then you're not really getting true price discovery, right? So in that scenario, let's say you incentivize people to hold for the long term these dividend stocks. What if like Ford comes out and says, you know what, we're losing revenue, we're not selling as many IC cards, we're going to cut the dividends. Can you imagine the dump of that stock that day?
Yeah. Right? Could destroy the company if everybody's just holding, right?
Well, the real question is, I don't think we have any insight on this, but is this going to be like retroactive? Like, are you going to be taxed on companies that you already have gains on, or is it going to be just companies that you'll have gains on in the future? And I don't think we have an answer to that yet.
I think it would be anything you have, because if you've owned
if it's anything that you have, I think you would see the selling start right now.
Yep. Potentially, yeah. I guess depending how long you've been in it, yeah. Yeah, but just, I mean, to play, to look at the other side.
And then you'd want to reallocate your portfolio, right, towards things that maybe you wouldn't want to sell, like names that you just kind of want to hold on to. I could see both sides of the coin, actually.
Yeah, like I'm just kind of thinking of it from like a political standpoint, because, I mean, as sad as it is, most of the time politicians are just in it to be reelected, right? So if you're looking at it from that standpoint, what's the percentage of wealthy? Is it like 5% or something like that of the population? So if you're looking at it from that perspective, then if he's only taxing the wealthy, that's helping so many more people that can get him more votes and stuff too, right? Like if I just look at it from a political standpoint. So I don't know how much weight is on that.
On that point, I think I remember the number was something like 800 billion or 300 billion over 8 years. It's not actually that much.
It's not that much.
No.
And while he may be playing to his base, at the same time, I feel like the middle class is participating in the stock market more and more, especially over the past year with all the stimulus checks going into Bitcoin and the stock market. So I'm not sure how many votes he's going to win with this.
Yeah, because it's tricky too, because I mean, as we keep going into inflation and stuff like that with the housing market and all this kind of stuff, like they're saying they're taxing people that make over $1 million a year. I mean, that bracket of people is growing every year just because of inflation, right? So everybody's saying, the rich and powerful and the super famous. I mean, that's not really the, quote unquote, the rich and powerful anymore. That's just kind of upper middle class at this point.
The guys on the upper, the All In podcast made a good point. They're like saying if we're going to get taxed this much, we just won't take that money. We have a pool of money that was going to be invested. We can't invest it now because of that. Why don't we still do some social good with it? So they came up with some ideas. They're like, one of them was, why don't we create a pool of money? It's like Warren Buffett's The Giving Pledge. He's going to give away half his net worth. It's like, why don't we create this giant pool of money, have a bunch of billionaires sign up, and then every newborn, we're going to give them $1,000 worth of shares in like an Apple or like in a Tesla or in like some kind of like nice growth plus blue chip stock, like a basket of stocks, and just give it to them for their life, and they can't sell it for like 20, 30 years. And that's effectively going to be their retirement or something like that. I think that would be a lot better. I mean, because like you're benefiting the economy as well as the individual. I mean, these are people like, especially for lower class people that can't get into stocks, especially that early. You just got a nice head start.
Mm-hmm. Yeah, it's a really interesting thought. Yeah.
Even if it's a really small amount of money, the power of compounding, that could really turn into a substantial amount.
Absolutely.
The only question is who determines what stocks are being bought? Like, is it the S&P 500? Is it really broad-based? Would the parents have a choice of what stocks? And just in terms of like some favoritism there, like emerging markets or Russell 2000, like there's a lot of different questions there.
Obviously.
No, I'd probably just S&P makes sense to me.
Yeah, I was gonna say like maybe just split it between S&P, NASDAQ, and the Dow or something like that.
Yeah. I mean, you want to invest in the economy, so just spread it around a little bit. I mean, the idea is to get this pool of money, put it to good use twice, because once in the economy and once, as a shareholder for this newborn. So, this is why I think politicians should really consult people in this business before they make decisions about this business. I don't know where they're getting it from.
Like, it's like we need to have more businessmen in politics. Make a lot more sense.
Yeah, I think all of them look at politics. You're like, I could make 1,000 times more and have like way less stress. Like, why would I do this job?
Yeah, exactly. Like anybody who's a really good businessman would not be a politician, because they'd be like, well, I can make way more money being a businessman, so why would I be a politician?
And it's just low key too.
It's low key, but sorry, I was just going to say, and you could just hire lobbyists. You want some policy, just get a couple of lobbyists. Get massage the legislation a little bit. You still get your way.
Yeah, it's funny. Like just on that point, Brandon, you said it's low key. I just got to tell you a quick story. I remember the first time I went to Vegas when I was 21. I went with my buddy, and I had we walked into the Tom Ford store, which is like suit store, really high end stuff. Walk in there, and I have like flip flops and a tank top on. I'm just looking around because I'm like, wow, there's a $20,000 silk robe and all this stuff. every room I went into, the salesmen are like, oh, can I help you try anything on? Can I do this? And, me and my buddy, I finally looked at the guys and I'm like, do I really look like I can afford anything in here? And the guy looks at me, he goes, to be honest, the guys that come in dressed like you usually walk out of here spending about $50,000. The guys who come in here dressed up in suits and ties, they either don't buy anything or they buy the cheapest wallet we have.
Absolutely.
I was like,
absolutely.
It's interesting.
Yeah, no, I it's true. Like the people who front like they have that, go out of their way to show that they have money, really don't have that much. It's
I know, it's
a funny
crazy.
thing.
Just looking at time right now, I think we should probably maybe dive into the small caps. If Kaylin wants to give us a rundown of what happened over the past week with small caps, that'd be great.
Yeah, I can just touch on that stuff really quick. So yeah, just like from what I'm seeing, I mean, we had the whole like Dogecoin thing, crypto thing kind of go crazy. So the past 2 weeks, like I didn't take any trades because I didn't see anything I liked. All the day traders that I follow and swing traders and stuff, they were all losing money. It just kind of wasn't really seeing much action. I mean, I do a scan every night. And usually, like on a normal week, I'll get anywhere from like 20 to 40 stocks, and like, a handful of them will look good. Like I was getting maybe 5 or 6 a night for about 2 weeks straight. So there's nothing going on, nothing really great. And at the same time, we're seeing like Dogecoin and everything. Everybody's talking about that. Everybody's all hyped about that. And then, coincidentally, as soon as that started to kind of tank, it was last Thursday, I think, was when it kind of started to broke that trend line down. We saw Thursday, Friday, and small caps all started to heat right back up again. I started to see, it was like 6 stocks every night on my scanner, and then all of a sudden it was 12, and then it was 20 again. And so it just kind of gives you guys a good perspective of like where that money flow is going.
So you saw like less potential good setups.
Yeah, nothing was moving. I mean, normally when, you'll have like a handful of stocks that are up, 40, 50, 60% or more, like we were getting like maybe 1 or 2 that were up like 15% kind of thing. So there just wasn't anything going on because I think all the attention was on Dogecoin. And the other thing too, like we really haven't had a slow market in small caps since like basically a year ago because of all the stimulus checks, because that kind of coincided. Everybody stayed at home. So, what do you do when you stay at home? Everybody sees, oh, this stock went up 100% overnight. Wow, I should start trading. So all the people started trading the small caps because those are the volatile ones. Then you get the stimulus checks. They put all that money back in. And then you get more stimulus. They put all that money back in. So we never really had like a slow time in the market. So I just want to touch on that quick for anybody that does trade those is, there is times when it happens. You just got to sit on your hands, wait for it to heat back up. It always does. It just kind of goes in cycles. And the biggest thing to remember is just, make sure that you're doing trades that make sense. Like I said, I didn't trade for 2 weeks because I just didn't see anything. And I was like, I don't risk my money unless I know I'm going to make money, basically. So I just wanted to, David, if you wouldn't mind just kind of pulling up your trade, if you got it handy. I just wanted to touch on something else kind of just related to volume and flow. If you go to OCGN, the chart there.
Oh, were you talking about that in the week?
Yeah. I think I mentioned this earlier.
So this company is really interesting because I think they're trying to cure blindness. Is that true?
Yeah. That's kind of their report. They kicked the whole thing off. You want to go to just maybe like the 5-minute chart or something like that?
5 minutes.
I love the time frames that you use. It's incredible.
I was just gonna say, like, holy shit.
I was gonna say 3 minute, but I was like, all right, we'll go 5.
Look at that volume on the dump, man. That's massive. Just
what I wanted to talk about. So this stock is 180 million float. So the volume on Friday that we had was just over 400 million volume, which is absolutely massive. So typically, like in small caps, we're looking at stuff that's trading, maybe around like 15 to like 40 million volume in a day. And they're usually around like, 10 to 30, 40 million float on average. So this to me is kind of a good indicator that I think small caps might be heating up again in the next couple of weeks. Because what I'm seeing here is when you get that much volume and it's 180 million float, it trades like a small cap, like it trades like a stock that's got 30 million shares, which is why everybody was in it. And everybody's so desperate for a trade because, a lot of people, that's all they do is trade these small caps for a living. Everybody focuses on this one that's moving. So I think that this kind of might be one of the kickers that kind of starts to heat it up a little bit. We have Dogecoin selling off, all those altcoins selling off. People don't really care about those as much anymore. So eventually it's all going to come back into these small caps. And that's just one of the things to always kind of keep an eye on is that volume related to float. So if you're seeing a stock that's got, like I say, I don't really like the trade stuff that's over 40 million float, 50 million float. But if I see something like that where it's, it's a 180 million float and it's got 400 million volume, I mean, that's going to trade like it's, a 10 million float stock with, 20 million volume, which is perfect. So I just kind of wanted to point that out and just show like these kind of moves. What's another good one here I had? BTX. If you want to pull that one up quick again on the 5 minute there. That one.
If you were to show me that chart and told me it was a crypto, I would have believed you.
Yeah. Hey, small caps came first, man. Crypto looks like small caps.
What time frame is this on? A daily or a weekly?
Daily. It's a daily.
Okay, yeah.
What is this? What is that?
That's a blue sky breakup, man.
Yeah. So look, these are beautiful charts, right? You get all these big spikes and they just get sold into. So like these ones are just
always fill, don't they? Always.
Yeah. And then it's just perfect opportunity to short.
Like that one, if you see that like in the middle, exactly. That filled that gap from, I can't see it, so small. Does it say February? Like perfectly.
Yeah. Zoom in a little bit more there, David, just so you can see kind of the last. Yeah, just kind of the last like week or so. Yeah, so this is kind of another good example. Like, here we just had, we had a big green day and then we had a little red day. Like it just kind of as it was moving up there. Another big green day, little red day. Another big green day, little red day. Like that again, like this one I think is only like 1 million float or something like that. So it's like a micro cap stock, so that moves really well. But this is just another example of, if you look at the volume on those first few green days, like I think it was only like maybe 2 or 3 million shares it was trading. So there wasn't really much going on, but like everybody's just so desperate for these plays that, the volume just starts to come in and in and in. And like, if this had been, I don't know, 3-4 weeks ago, I bet this thing would have shot right up to like $30 probably in a day from like $5, like easily, if this had enough attention on it. So it's just kind of keep an eye on the float versus the volume on these things. And I just wanted to mention, if the markets are slow, just sit back. I mean, it's like we say, no matter what you're trading, it's you gotta let the stocks come to you. Like you can't make the market do what you want it to. So I just wanted to touch on that because I know a lot of guys I was following this week were losing a lot of money the past couple of weeks, and I didn't lose anything because I just didn't trade. So I didn't see anything I liked. So sometimes that's the best.
Thanks for showing that to us. I have something that you're absolutely gonna love, Kalen.
Okay, bring it on.
David, punch out IWM. This is a small cap index. Russell 2000.
Oh yeah.
Pop that up on a daily and a weekly. Look at those wicks, man. We got some higher highs. We broke a looks like a bullish symmetrical triangle here.
Oh yeah.
That is very, very bullish. Starting to see the volume tick up. We got some higher highs in the RSI. Yeah. That looks great.
Yeah, but
if you pop it up on a weekly, you'll see the wicks.
Yeah.
The wicks I'm talking about.
The past 2 weeks there, it's just kind of consolidating. Right? So.
Look at those wicks, man. This thing's going higher. We're going to start seeing the small caps heating up.
Perfect. Yeah, I think once the small caps start heating up, that's when you're really going to see all those garbage crypto stocks just fade off to zero. Because that's all it is. It's just an excitement thing. And that's what small caps are. I mean, they come out with some...
People don't care what they're trading, man. They're in it for the money.
Yeah.
All these people in these small cap cryptos that tell me they're in it for the tech.
No.
It's not true.
Yeah. It was like even one of the guys I was talking to the other day said he put like $500 into Dogecoin at like 43 cents and it was down to 20 the other day, and he's like, oh yeah, I'm just gonna hold it until it goes back to break even. I'm like, oh man.
Do you guys see Bitcoin right now? 47,000 breaking down before our eyes.
Oh, is it?
Yep. They must have listened to our podcast, man.
My God. No, I was just gonna say real quick, this looks like a fulcrum bottom, kind of. Am I getting that right? Almost a fulcrum bottom. Yeah, this will be the fulcrum. So that's...
As long as we start seeing like a higher high next week, then I would agree completely.
Mm-hmm.
Oh, is that what... I don't know what the factors are for determining that. So, but I just thought I saw it before. This is an ugly
so
chart.
This looks like the exact pattern that we saw last week. And that was like right when we put our podcast out. We put it out. Bitcoin was like 55,000. We made our bearish call. It dumped right after. I think we could have the same pattern play out here.
Mm-hmm.
I just want to say, it's got a buy signal on the MRI, but that's a different thing. But so I wanted to say, like, there usually when you see a long wick like that and you get 2 down days, like we're probably going to go lower. I mean, because this wick was all the buyers. Anybody that wanted to buy it, that wanted to deal, they bought it back up, and we're still going back down. So there's no support here. There's nothing.
Well, there's no support there. And I was telling you guys this last week. Whenever I see a long wick like that, sometimes it foreshadows what's to come. So I think that wick was just signaling. We're not ready to trade at that level yet, but we're going to be doing it soon. The RSI is signaling that because the RSI is showing lower lows here. We're closing at the low of the day. If the day closes here, that's a low. And if that happens, man, like that bottom's going to break.
Well, look at the weekly. It's like that's a messed up candle. And the monthly is going to close soon too. And that's not going to
You're
be
going to win your bet this week, man.
Don't get me excited. Don't get me excited.
Well, I already won mine.
Oh, did you?
Yeah.
Making side bets over here.
Man, I made a bet on top of your bet.
Don't you know derivatives are dangerous? Didn't you watch that movie?
They're very, very dangerous. They are.
What do you do?
I went against one of my rules.
Wow, this was almost a sure thing though, right? Oh,
well, it's interesting to see Bitcoin dumping, but the alts are holding up pretty well, actually.
Oh, I was just going to say, I do have the Bitcoin dominance chart that I just started looking at recently. Start charting recently. So this is Bitcoin versus altcoins. And as the price moves down, it means Bitcoin is becoming a smaller and smaller share of the entire crypto market. And it broke down hard in January. Yeah, I know, me too. And it broke down hard in January 1st, and that's kind of when the alt season started. And this was the last alt season. This was the last alt season. So right here. So this last alt season, Bitcoin dropped 50%. So in this one, we are just at 30, but I'm hoping we bounce. So I'm thinking we bounce around the 50 or the 618 fib, and we go back up to like maybe 57% or something like that. Because if Bitcoin continues to come down, alts are going to bleed way more than Bitcoin.
Mm-hmm. That's the thing about those coins. Like when you look at all those junk coins and stuff like that, you know, I mean, the three of us know as well as anybody, a lot of that stuff's garbage and it's coming back to zero and everything, but you can never predict the top. Like it just matters on market sentiment. You get enough people excited. I mean, Dogecoin could go to $500 in a month. It can, and it could, right? It doesn't matter what it is or what it's worth at that point. It's just whatever the market sentiment is. And that's why, you know, a lot of people got to be really, really careful on that kind of stuff. Is it happens all the time. So it doesn't.
It absolutely could go to any price. Like as we said last time, markets can remain rational for longer than we can remain solvent. Mm-hmm. As long as people want to buy and nobody wants to sell, the price is going to go at whatever price people feel comfortable selling at. Yeah. But if Bitcoin does top, which I think it has, last alt season we saw Bitcoin topped in December of 2017. And most of the alts topped in like January, February of 2018.
Yep.
So
I think Ethereum was the last to top.
I think it was NIO actually.
Oh yeah, that might be it.
And NIO was the last to top this time. So if history is repeating itself, then we could see this intermediate cycle top. I think this intermediate cycle should top.
I think I know what the signal is. So a couple weeks ago in my other chat group for cryptos, I said because a couple of the holders still had Litecoin, and Litecoin was popping, and Litecoin is dog shit. Like I like the creator, but it's dog shit. Anyway, it started popping, and I remember last cycle, right before the peak, Bitcoin's peak, Litecoin popped, and it made no sense because this is a coin that's it's a copy of Bitcoin, and it does nothing, right? And it popped, and then Bitcoin topped, and this time Litecoin popped, and it looks like Bitcoin topped. I'm like, there's a lot of signs. There's a lot of signs.
There's a lot of signs out there, and I think Dogecoin going up. Like, what did it do this year? Like 100x?
Yeah, something like that.
Like, I want to congratulate all Dogecoin holders on that. That was just amazing. That was a great trade, but don't forget to sell.
Yeah.
Don't forget to sell.
Yeah, I was just going to say that.
You only realize a profit when you sell.
Yes. Yeah. And like I was just going to mention quickly before we go to the Tesla thing that like I was looking at quickly at the alt charts, like the top 10 alts are down like 35 to 50% from their peaks already, with the exception of Binance and Ethereum. But I mean, there's a lot of coin holders out there that don't hold those or hold like very little. They're like the more exotic alts, and they're down like 50% from the top. And you know, some people bought that top. I just feel bad for that.
Well, I noticed the coins that they want to hold are the ones that are like very, very small in terms of price. It doesn't make any sense, but like the ones that are trading like under $1, psychologically, they think that they can make more gains with those. And quickly, before we dive into Tesla, I think we should just like rehash from last week, look at some of the earnings that we were talking about last week, look at just a couple of charts, just take a couple of minutes. I think the first one that we should look at would be Netflix.
Yeah.
NFLX.
So Netflix did well on their earnings, right? They just missed on their subscribers.
So they crushed earnings, but when it comes to Netflix, the only number that counts is their subs. They got 3.9. They were expecting 6. I said last week they wanted a little bit more than 6. If you can pop it up on a weekly, it's trading under the 200 week right now.
Yeah.
So that's at least on my chart. I'm not sure what you have going on there.
Look at that volume there. Look at that volume there. That's this week, right?
It seems like every earnings day, it's got a huge volume spike, eh? Look at
that. Holy shit, yeah, without fail.
Wow.
Without fail.
I'm going to have to watch that.
Short.
Yeah.
Look at this, Caleb.
Well, I don't know if your small cap strategies are going to be able to work here, man.
I could try.
you just said you only like companies trading under what, 40, 50, right? Million.
Yeah. Well, if it's got enough volume, it might move the same. Depends, right?
Netflix has a market cap of $223 billion.
Yeah, that's a little out of my.
But we got something.
Look at these slam downs
on the daily. If you go to the daily, it's trading under the 200 day. Rather.
Yeah.
So I think Netflix is like in the penalty box for the next like couple of quarters. I think they're really like guilty until proven innocent. So this name's going to continue to solidate, and eventually it's going to be a really, really good trade. Just watch that.
You're right. It might do one of these where it's just going to trade between the two averages for a little bit.
Yeah, it's going to just churn for a couple of months here, and that's fine.
I like that penalty box.
Wouldn't sweat it. I wouldn't sweat it if I was a long-term Netflix bull. I don't hold any Netflix. And yeah, to use a sports term, it's in the penalty box for 1 or 2 quarters.
Man, it surprised 23% to the upside too.
Yeah, they were good earnings, but people only care about subs. And when I think about it, I think it's because it's COVID and there hasn't been a lot of like new TV series, excited new TV series in production.
Mm-hmm.
The only thing I watch on Netflix is The Office. I'll just watch that show over and over. So I'm the last guy to ask.
Looks like it's been consolidating for like a year, kind of like in about $100 range though. So,
well, that's great because it's holding that $500 psychological level.
Yeah. It looks like
as long as it holds that, I wouldn't worry. Next stock is Snapchat. This company, on the other hand, had a really, really good quarter, beat on the top and bottom line, raised their guidance. So I call that a beat and raise. And this company has 280 million daily active users. So those are the numbers that the advertisers look at. And if you pop it on a daily, I'm not sure what you have it on now. It looks really tiny on my screen. Perfect. Maybe pop it on a weekly then. So you got inverse head and shoulders on the daily. But on the weekly, you'll see this is like just heaven for trend following.
Don't you find that curious? Netflix destroys earnings and increased earnings quarter over quarter, sells off. Snap is actually down from fourth quarter, and yet they're up. Well,
for social media companies, it's all about the monthly and daily active subscribers, and then for Netflix, it's all about the monthly paying subs. So to me, it makes sense. I mean, the headline number typically doesn't matter too much.
Wow.
I'll give you one more, just in the essence of time. United Airlines was a company that we all said we were somewhat bearish on. Threw some cold water on the travel stocks, and they had a big disappointment. So they had a $1.3 billion quarterly loss. And while there is some pent-up demand for travel, at least domestically, I know United is leveraged towards business travel. And I don't think we're seeing a lot of those international flights come back soon. A lot of executives going on these long business trips, flying business class.
Isn't the business model effectively subsidized by the business and the higher classes, like the people who fly coach are subsidized? So
I don't think they make much on the economy fares at all. I think maybe it's a loss leader.
Yeah.
So out of all the airlines, this is just one I'd probably want to stay away from. It could still be cheap, but I don't think cheap is good.
I mean, technically this looks bad because they broke out late. They're retesting and it doesn't look like they're going to survive. This is on some high volume sell-offs here. This is on the weekly too. I'm
just wondering if we can really break all those moving averages and have a true trend reversal.
Yeah. This is what I'm worried about, man. Like, if we start getting these failure to launches in the stocks, I think the whole market's going to have a really bad last half of the year. I know that's the pessimist of me talking, but I can't help it.
Well, I think the market's just like bifurcated. Like, I don't think that we can say, okay, the market's going to be positive or negative. I think we have to look at different subsectors and see like what's driving it. And when I look at the charts of the NASDAQ, when I look at the charts of the technology stocks, that's where I want to put my dollars versus something that's older economy. Like, I think Zoom has taken a chunk out of the airlines, knowing that people can do business worldwide on a Discord or a Zoom conference.
Yeah, I think you're right about that. Although I do hear a lot of people complaining about Zoom too. Yearly. Oof.
Other companies that had really nice beats were Chipotle. We covered them last week, and Coca-Cola. We covered them in our last episode as well. So we had generally really positive earnings.
Look at Intel. Intel beat earnings.
Your favorite company. Yeah.
Look at that. In the 2 weeks that we called the top, we released that that Sunday or Monday, and then it's been down. It's down what? What is it down? It is down 14. Well, it's closing at 13, but it was down at peak like 15+%. Oof. On rising volume too. Ooh. Surprised the downside. Well, I mean, they still had great earnings. It's just I don't know what the expectations were so high for, but
so I think when looking at Intel, it was the weakness in the data center. And we knew that some of their competitors were going to be taking a chunk out of that segment. But, if they're losing ground in the data center for their CPUs, that's just not good news.
I think I'm going to call a fractal. I think what happened here with this larger cup and handle kind of formation failure, I think we might see here with this smaller cup and handle formation failure.
I can see that.
See what's up. Yeah, and then we'll see what's up. Probably bang at this top for a little bit and then see what happens towards the end of the year. What, November? Yeah, that's a good time.
It's a turnaround story. A lot of people have a lot of faith in their new CEO, but there's a lot to turn around here. It's definitely being supported by really good fundamentals in their sector. I always say I would rather own the worst stock in the best sector than the best stock in the worst sector.
That's fair.
That's Intel.
That's Intel, yeah.
A rising tide should lift all ships, and I think that the semis, again, is definitely the place to be. I'm super bullish on the semiconductors. Pop-up SOX, SOX.
Right. I was just going to say...
the gift that keeps giving, man.
I was just going to say, Kalen is the shark in the little pond.
Yeah.
Here we go. Weekly or daily?
It doesn't matter.
All right, look at that.
That's a bull flag.
On the other chart. Like we're seeing on the other, whoops, what am I doing here?
It's an equilibrium. It's just waiting for that catalyst that's going to send it higher. It could be NVIDIA earnings, who knows?
Yeah, you're right. How do you know how much NVIDIA is in stocks?
It's the biggest position. It's like maybe 7 to 10%. I don't have the exact number offhand, but it's a market mover, and you're going to see a lot of the names will follow NVIDIA.
I think people are really bullish on AMD too, right? I mean, they're all taking share. Their earnings is this week too, is it? Oh, Monday. Shit, tomorrow's Tesla and AMD.
Well, the other one that we should look at, because you called it on here 2 episodes ago, ASML. They had a great quarter last week. Yep. Our Dutch semiconductor company. You could do the one on the NASDAQ. It's the depository share, the American depository share.
Wow.
Yep.
Wow.
Fully expected that.
Woo. They smoked earnings too.
Smoked it.
I mean, they're the
I
only
think
ones.
you're going to see that from all the semiconductor companies, especially who came out 2 days ago. Was it Ford that came out and they said that the semiconductor shortage is going to bite for a couple more years, actually?
Yeah, it might be Ford, actually. You're right. Well,
Yeah.
several people came out. Like, I think it's almost unanimous. Like,
But it's
wow.
it's going to be drawn out for longer than expected, and these chips are used in everything.
Yeah. And I think
don't
that's
think-
the thing, right? We have
I
higher
don't think
demand.
our viewers need another semiconductor pitch. But yeah, we have higher demand, we have lower supply.
Shortage. Yeah.
Any amount of chips they can produce will be sold
Yeah. That's incredible.
at any price they want.
200 billion. Well, not a bad company. And no rising volume too. That's what these guys aren't done. They might go to $1,000 by the end of this year.
Oh, I love that. I love higher highs on higher volume.
Oh yeah, look at that. Look at that. Let's look back.
So
here in a
what
year.
about Tesla, man? They got earnings in there.
You know it's earnings when you hear bad news about Tesla
always.
in the news. So there's a crash that happened like last week. It took the price down a little bit. So 2 people were found dead in a Tesla Model S that burned up, and the owner was in the back seat, and the passenger was in the passenger seat. So no one was in the driver's seat. So automatically, every media, from Reuters to Barron's to you name it, immediately just thought this shit was on autopilot, and autopilot crashed and killed these 2 people. Except autopilot doesn't work when there's nobody in the driver's seat. There's a lot of security features put in there, right? And they even like boast about saying how the battery's a hazard because it burned for 6 hours and they used 30,000 gallons. Well, here's the fire chief of Houston who said the rumors got out of control. He said they put it out in 3 minutes, and they didn't call Tesla because they didn't know what to do. Like the media not only didn't do research, but they sensationalized this whole story. And I have some little proof that it's like there's a lot of short sellers out there, and I'm sure they're trying to take the price down, right? But
we have enough proof, man. We have like so many big Wall Street firms that are short Tesla. Don't want to say any names,
40 billion.
but it's
just say the total. 40 billion. 40 billion total.
What percent of the float? I'm curious about that.
It's actually down now. 20%, I think it was. But
that's massive.
I mean,
it's absolutely massive.
But just real quick, I wanted to run about Tesla's earnings because I'm big on them. But here's Consumer Reports. So they came out with an article soon after because everything in the original reports are proven to be false. So then they kind of shifted the argument to saying, well, the danger is that Tesla autopilot can be fooled, right? And so this is how they fooled it, by the way. They tied a weight to the steering wheel to make it feel like there's a hand on there. The seatbelt is buckled, and then the guy is he's on the passenger side, but he's got his foot on the pedal. That is the only way to fool autopilot.
That's right. A little excessive.
And they think this makes Tesla look bad, but the question is, did you fucking die? No. Did you fucking crash? No. So Tesla autopilot works, even when you fool it.
And who is going to do that? Like,
you have to intentionally, it's like, if I wanted to go to that level, I could fool cruise control too. Am I going to, go after every car company that offers cruise control?
That whole argument's invalid though, because you could say, every car now has traction control. You could argue, I spun out going around a corner because my traction control failed, or like it's the operator at the end of the day.
And then they blame Tesla because they're saying it's the marketing. They call it autopilot. Well, here's a piece of Ford marketing with their new self-driving thing. This is a driver with his hand on the sunglasses and his lap, no touch on the steering wheel. Like if you're talking about market, like the media is just so biased. It's like everything you blame Tesla for doing, the entire auto industry is doing, but you focus on Tesla. Right?
Yeah. Well, it's because you got all the short sellers that are underwater. They're trying to pay the media.
Yeah. And I just want to point this out because data doesn't lie. First quarter registered one accident for every 4.19 miles driven in which autopilot was engaged. Drivers without autopilot but with our other active safety features registered 1 in every 2 million accidents. One in every 2 million miles. For those driving without autopilot and without active safety features, registered 1 in every just under 1 million. By comparison, National Highway Traffic Safety blah blah says there's a crash in every half main. So Tesla is demonstrating with autopilot on, they're tenfold more safe than cars without. Data doesn't lie.
Love it.
I mean, so just the fact that they can only focus on a single accident, like the first one that's ever happened, they're like, like 500,000 accidents happen in the U.S. a year. Like, it's just ridiculous. Oh, here's more FUD from Germany. So this is an interesting take. They're saying that the traditional automakers are ahead of Tesla because Tesla doesn't have hybrid plug-in technology.
What?
It's like they occupy the leading position in electrified automobiles in Europe. They played an outstanding role in blah, blah, blah. So they're saying Volkswagen. And it is precisely with this hybrid technology that Tesla cannot follow this, and due to lack of internal combustion know-how, has no plug-in hybrids to offer. So they're saying that Volkswagen is going to beat Tesla because they have hybrid plug-ins. That's kind of a move backwards from where we're heading.
Yeah, that doesn't make any sense at all.
Yeah, because now you have to manufacture an ICE car with battery technology and throw it all together. Why don't you just go either or? They'd just be more efficient. Hybrids are the least efficient, stopgap measure. But this is how, because Germany's threatened because Tesla's got a factory out there now, which, by the way, looks amazing. I mean, look at the size of this thing. This is a gigafactory. So they're not only going to be building...
It looks like the Cybertruck. It does.
Look at that. That's where it started with.
It's awesome.
So they're not just going to be building the cars there. They're going to be building your Cybertruck, Halen, as well as the Semi. And they're going to be building their new, I think 3850, I think that's the number, the batteries. So the tabless batteries, the breakthrough solid state batteries. So this factory is going to be everything. Everything.
That's crazy.
Yeah, I mean, and my buddy just got a job there too, so good on him. But I showed that. So just want to quickly go over Tesla's deliveries because we'll know tomorrow. So Q1 is actually a huge beat. They delivered, let's see, Q2 last year they delivered, I think, 180,000 units. I can't find the chart now. They delivered 180 last year in Q2, but I'm still on this page. So they delivered 180 and Q4. They produced 180 this year, but delivered a little bit more because there's always some in transit. So Tesla doesn't count a delivery until it's in the customer's hand. So even if it's sold, paperwork's there. If it's still on a truck or it's still not, paperwork is correct that day, they don't count it as a sale or delivery. So that's why they delivered more than they produced. But I mean, I know personally that their cars are supply constrained because I ordered one and I'm waiting like 8 weeks for it now. But so they killed deliveries. The last quarter was their highest earnings ever, and they killed deliveries. And this Q1 is traditionally their weakest, and they beat it by several percentage points. And so tomorrow's number is going to be very telling where Tesla is going to go going forward because this is their weakest quarter. Now, what makes it interesting is because last quarter, the stock actually went down on disappointment, and it was because their profit margins went down. And people were wondering why. Like, if you're delivering more cars, why is your profit margin down? They had a lot of one-time expenses. So because of the massive share increase, Elon had a bunch of his stock options or stock rewards get passed. So then he realized some of those there. And there was also some construction things that are going on. So they stopped the Model S and X production line, and they're retooling to build the new plaid models, the one that go from like 0 to 60 in 2.9 seconds. So the production for the Model S and X took some expenses away. So all that told, without those headwinds, this quarter should be quite an epic quarter, a lot higher than previous years. I just want to show, where's Rob Mowers? Here we go. Here we go. So these are the previous years. There we go. So they delivered 180,000 actual last year. So this is their year-over-year, quarter-over-quarter increases in production. I mean, as an investor, this is what you want to see. You want to see like exponential growth, right? Year-over-year deliveries, 109%. Automotive with sales, 75%. I mean, so the consensus estimates right now is somewhere between 27 cents per share lowest to 90-something cents at the highest. So Rob's got him at about 56 cents in the middle. But this is like, I don't know what your thoughts on this, Brendan.
Well, I can look at it from a technical standpoint. That's just about it.
Yeah, like what do you think about the numbers? Like increase in deliveries, increase in profit margins?
I think Tesla's definitely establishing itself as a leader in the automotive space. So I would definitely agree. I'm not sure what they have like forecasted. Like I haven't made like a model myself, so I'm not sure. I definitely think it has some nice support at its 50-day. It just obviously had to consolidate a really, really massive move. Like we can't forget Tesla from like September like 2019 to like the $900 peak went up like close to 20 times.
Yeah, there's just one thing with Tesla that I am worried about. Get rid of this shit.
Like you got to consolidate big moves, and the same with crypto.
Yeah.
So I would just look at it on like a daily time frame and see if it can hold the 50. I think the earnings are a massive catalyst, but either way, the market wants it to go one way or the next. So we'll find that out after the earnings.
Yeah, what a great start. I think it was 2 Mondays ago. We broke through the 618 support level. We came back down to test the moving average. But so like right now is make or break, because if earnings is good, we're gonna test this resistance level at 844. So we'll see what happens after that. But if not, I really think we're going to fall through and test the 200 if for some reason it disappoints. I don't see it happening, though. This is an interesting article. So this is one of the more forward-looking things that I think most investors are looking for. Tesla announced that they've registered to sell insurance in Germany in concurrence with their Tesla Germany Giga Berlin factory opening. And they also so they're in California right now operating, but I think they also opened up in Texas and they applied for one more state. So they're opening up insurance, and Morgan Stanley's got them adding $35 a share to their share price because it's just from the insurance business alone. So yeah, I mean, they have a lot of things lining up, coming up, because Giga Shanghai has like been a moneymaker for them. Like the Chinese auto market is the largest auto market right now. They're the only foreign company that's allowed to manufacture there and sell there, and that factory is going to go to capacity. They're going to be able to do 500,000 cars a year. You got Giga Berlin coming up, another Giga factory. Then you got Texas. They forecasted 50% a year growth every year for the next 3 to 5 years. That is outstanding.
That's incredible. And just to look at China too, we got NIO delivering their earnings this week. I'm not sure about XPeng, but I know NIO is. And because their deliveries are on such a low base, they have the opportunity to really surprise to the upside. A lot of analysts are very bullish on NIO. It's one to watch.
Yeah, I actually don't follow NIO as much as I should, but it looks like it found support here on the 15th. I don't know what happened there, but
and same with XPeng too. It was just I think it was what Kaylin was talking about. We had that shift from these names really largely being out of favor to them really finding their level, finding their footing, and they still have to make a couple of higher highs. Like they have to work their way through some moving averages and some very important resistance levels, but they've definitely found their level. Like people want to buy NIO at that level. Same with XPeng.
And that coincides $50. Target is $50. Coincides with the VPVR, man. This is a good. It looks looking pretty good technically.
Well, it just has to base. It probably has to base for a couple more months, man.
Interesting. Great news. Well, actually, they're still going to be at a loss, right? I think both NIO and XPeng are still going to be at a loss, but we'll see how fast they can grow revenue. I think that's the important number.
Well, that was a story with Tesla for years. People were, a lot of skeptics were really upset that they weren't making a profit, and now they are. And people want to know now how much profit are they making, and how much of the auto market are they getting. So that bar's been raised, and now I think NIO's in the same boat that Tesla was in a couple of years ago.
I think so too. My only problem with NIO is they have that stupid business model where they want to build the battery swap infrastructure, and that's just like a lot of capex. I think it's unnecessary for a little bit of convenience. I don't know. I don't know if you have thoughts.
You're the EV expert here, man.
Well, no, just as a driver, you guys, like, do you want to charge your car at night at home, or do you want to be able to drive into some station somewhere and swap a battery in like 3 minutes?
Both sound good. Yeah.
Well, they give it one interesting incentive, and it's that they'll sell you the car minus $10,000 because that's the cost of the battery. So you get your electric car, and then you lease the battery for like $150 a month.
And what does the car cost? What's the total cost minus that?
So like $50,000 minus 10, so maybe $40,000 car.
Okay.
US. You're still
That
paying
gets
the lease fees. Yeah. It's interesting. It's an interesting model. Like the only problem is like how many of those swap things do you have to build before it actually becomes usable, right? I mean, if you sell more cars, you need more stations, and then that's a lot of overhead. I mean, it took Tesla 10 years to build the supercharging network, and that wasn't cheap. And I think that's one of the key features that's not being appreciated about Tesla, like their share price. They have 20,000 chargers around the world. No single automaker or combined can say that, right?
Yeah, I know when I was looking at them, I can basically drive across the whole country with them. Like they're all over the place.
Yeah, and Canada's just changing a lot too. Now this says we're going to be charged. So right now we're being charged per minute because it's really hard because electricity prices fluctuate, so you get charged per minute. But I think Canada is trying to pass legislation that's going to force somebody to tell you to charge us per kilowatt, so we know exactly what we're paying for.
Okay, yeah, that makes sense.
So I don't know if that's good or bad, but but here's a bad one. Trudeau is he wasn't for increasing capital gains tax, but he wanted to increase taxes on people buying EV cars over $100,000. I thought he wanted to go green.
Yeah, I didn't like. Now the only Tesla you can buy and get that reward on is the base Model 3.
So yeah, you get the reward if you buy one that's $50,000 or less. So you're basically getting a Volt, right? And then if you buy $100,000 or more, you get extra taxed.
Yeah.
What is this? Is our genius government right here?
Well, on that note, should we end it here, guys?
Yeah,
we've been running for a long time.
All right, cool.
Awesome.
All right,
Awesome,
thanks
guys.
for watching, guys.